Welcome back. Dipan Mehta, Director of Elixir Equities, is with us now to talk about some individual stocks which should be on your radar this morning. Dipan, morning. I hope you had a good holiday yesterday, a restful one. The first question is on Vodafone Idea. Would you recommend that retail shareholders participate in this FPO?
Yeah, good morning, Rima, and thank you for having me on your show. I think yesterday was a great holiday. In between the week, a holiday is always welcome. So coming back to Vodafone, I think that it's great for Vodafone's long-term prospects that they're raising money the way they are. And as if this is going through successfully and it's followed up with some more conversion of debt by the government, then clearly Vodafone would be well on its way out of its woods, and it'll attract even more investors, and fundraising in future may be easier. But there are a lot of ifs and buts over here, and one needs to really see solid fundamental performance before you can look at Vodafone as a long-term investment idea. From the FPO point of view, I think it's a great opportunity for investors to flip their holdings because it will be at a 10-15%, maybe even a 20% discount to the stock price, and that does provide an arbitrage opportunity. So I think that it'll get good retail participation just on account of investors' strategy to try and flip the stock once they get the allotment. And you could have a sell-off in the stock post the listing of the IPO shares. But by and large, it's very positive for Vodafone and also very positive for Indus Towers. And I'd like to play this entire thing through Indus Towers rather than Vodafone Idea. Having said that, it's a company, Indus Towers is a company in which we and our clients are invested in as a measure of disclosure.
Okay, got it. Dipan, hi, good morning. I wanted your thoughts on Angel One. I mean, the numbers have been phenomenal, right? Almost a 30% revenue growth. The client base is up about 15% quarter on quarter. But the stock has also done really well. In the last 1 year, the stock is up 120%. At this price, is the risk reward still favorable for investors?
Yeah, good morning, Sonia. Very, very impressive numbers from Angel. And I had certain reservations because of a lot of regulatory changes taking place, whereby brokers could not keep margins of their clients, and those sort of issues were there. But now I think they're well behind, and it's further continuing on its journey to become a full-fledged fintech player. So from that point of view, I think the company has got great prospects, very aggressive management, which has demonstrated its execution skills as well. I think valuations also are quite reasonable. So I would say that it's a great company to look at from an investment perspective. And if they continue to report these kind of numbers, then I think the stock can certainly go higher. And I agree that the stock has rallied by 120%, but also it's from its highs is corrected by about 20-25% also, if I'm not mistaken. And I do feel that compare it with some of the other fintech companies or NBFCs, the kind of growth dynamics and growth profile is much better with lower risk.
Dipan, hi, morning. Jio looming with their venture doesn't make you nervous? Jio Financial?
Good morning, Prashant. Prashant, I've been in the financial services industry for almost 3 decades. And it's not like setting up a petrochemical plant or, setting up a telecom network. Because it takes, that's something which you do the project and the revenue start coming off. You do a 10,000 crore project, 20,000 crore project, and then once it gets commissioned, the revenue start to roll in. Financial services is basically a very slow business. It is very manpower oriented. There are many, I would say, from an organizational perspective, many systems need to be put in place for risk management, which is the most important thing. And while it's easy to kind of, get the book going, but to sustain it continuously and then to have the collection efficiencies in place, to set up the right tech platform, I think these things take time. It cannot be done just in 1 or 2 years or so. And mind you, it's an industry where there are many players, and to an extent there is there's pretty much level playing field. So from that point of view, just having the advantage of low resources or the brand of Reliance is not going to be just enough. It's a lot to do with manpower management and, as I said, risk management systems as well. So while the prospects are great for Jio Finance, I just want a demonstration as far as the basic business model and how the numbers are going to come through before I look at investing in it. So from that point of view, and of course, the stock also has run up. So looking at the entire risk return profile, I would give Jio Finance a pass.
Dipan, this move on Exide has pretty much come out of nowhere, right? Of course, it was a potential for the company, EV batteries, but suddenly Hyundai and Kia coming out and saying, you know what, instead of producing the batteries in-house, we're going to outsource it to cheaper manufacturers like Exide. I mean, that's a huge business potential. Do you think it's factored into the price, or could there be more to go?
See, I think it's still work in progress, Sonia, because the technology has to be established. Basically, Exide is not a lithium battery player, and they're dependent on external sources for technology. And there are execution risks also as far as their lithium battery plant is concerned. And end of the day, the companies like Kia and Hyundai are not the largest players in the EV segment as well. And while in the two-wheeler segment, it's becoming pretty clear that Ola Electric is going to be the market leader going forward. Something of that has to emerge on the passenger vehicle side as well. So while I think sentimentally it's extremely positive, I don't think for the next 2-3 years it's going to do much for the earnings of Exide Industries. And end of the day, lead acid batteries is a pretty mature business. So from that point of view, I think a lot of the upsides have been captured in Exide. But the view may certainly change if the entire lithium-ion battery business and that division starts to contribute materially, and you see great prospects with even more supplies and production zooming up.
Dipan, what about IIFL Finance? The board has approved a 1,272 crore rights issue at a price of 300 rupees, so a steep 30% discount to where the stock currently is, and this comes in the aftermath of the RBI banning it from dispersing gold loans. So the stock is corrected, but it's trying to find its feet. This rights issue, how would you view it?
See, I think it's investor-friendly move because certainly the discount is quite significant, and any resources coming into an NBFC immediately start to benefit in terms of higher net interest margins. But gold loans was a great growth driver for IIFL Finance, and it was something in which they had created a fabulous niche and market share in a competitive industry. But the setback, I think, I'm not sure how it will actually play out. But look, IIFL Finance management is extremely aggressive and I would say quite dynamic. So they'll work around these issues and they'll find solutions. And most importantly, the valuation of IIFL Finance compared to its peer group is extremely attractive given its size and diversity of its loan product offerings. So from that point of view, I'm quite positive on IIFL Finance, but you should brace yourself for 2-3, maybe even a year of soft performance, which I think has got captured in the stock price. But the long-term prospects are very good. And, 1 year down the line, you could expect the growth momentum to pick up. And I'm pretty certain that, P multiple or price to book has to get re-rated if, the growth rates tend to pick up.
We're talking about IT services. Anuj also mentioned that from a technical perspective. What's your sense here?
Yeah, I think that TCS results are okay and there are not much expectations from Infosys. So it's pretty clear that neither the performance nor the management commentary may be as great. So let's just wait and watch. I think we're getting into the earnings season. A lot of IT companies will come out with numbers in the first half of this earnings season. You should expect slower growth rates, but everything depends on the management commentary and how they see the next 2-3 quarters or so. Intuitively, I'm quite positive on IT because this entire AI, generative AI, chat GPT, that could be a big new wave for IT services and could lead to significantly higher spending, a lot of which will come to Indian IT services. But we have to yet see the evidence of that at the ground level. I mean, the companies have won significant transformational projects, but it's not yet, got into mainstream like some of the other kind of activities which these companies do. So I'm just watching the sector very closely. I'm not, buying into it or selling. Just wait and watch and let's see how it plays out.